Great. So we are live now. Guys, welcome. Thank you very much for joining again. Sixth in the series where with under startup beat COVID-19. So today we have one of the most active Japan-based VC firm people with us. So let me introduce you, Ebihara-san, Takeshi Ebihara-san, who is one of the founding general partner in Rebright Partners, and Brij Bhasin-san. Brij is a very known entity in our ecosystem. All of us, most of us know Brij. Uh, so uh, you know, so Rebright has been very actively investing in India for a long time, and we all are eager to know how this current situation, current COVID-19, is going to impact not just Rebright Partners' way of looking at Indian ecosystem, Indian startup ecosystem, but also the rest of the Japanese VCs. How is this over? How is this going to hurt or push the overall sentiments of Japan VCs? Uh, okay, so let me hand it over to Ebihara-san and Brij-san to take it forward. And after 30 minutes, we'll start taking up the questions. So, guys, my one suggestion is don't raise your hand. So, whenever you have a question, just type in the text box, and I'll pick up the relevant ones, and we'll take one by one questions. Over to you, Ebihara-san and Brij-san.
Sure. Hi, fellas. Actually, I'm here now in the Singapore. So, as a kind of introduction by the Sunil, we are the Japan, Singapore, India hybrid venture capital firm. So we have an office in Tokyo, here in Singapore, and the Bangalore. So the Brij has a general partner who is head of the India region, is taking care of all the activity over there in India. So, Brij, how about you quickly make an introduction, like our, some of the, example of portfolio company and recent activity, etc.
Sure. Thanks, Abhirasan. Hello, everyone. My name is Brij Bhasin. I'm general partner at Rebright Partners. As Abhirasan said, we're a cross-border venture capital fund. We have been active in India for the last 5 years, where we typically invest in seed to Series A stage. So typical investment size of anywhere from few hundred K USD to about 2 million US dollars. And we have invested in 15 companies till date in India. Some of our portfolio companies that you may have heard of are InShorts in digital media news reading space, DocsApp in digital healthcare, telemedicine, Let's Transport in logistics and supply chain businesses, and Medica Bazaar in B2B healthcare supply chain business. We invest across sectors. So we, as I said, these are diverse sectors: healthcare, logistics, digital media. We've also recently been investing in deep tech. So we've invested in a few companies in enterprise software, chip design, agri-tech, and a few others as well. And as our discussion goes along, I can give more perspective on the kind of sectors that we look at or the kind of companies that we're interested in.
Sure. Thanks, Rich. So on top of that, we of course have some portfolio company here in the ASEAN, major 6 countries. One example is the Bukalapak, which is in one of the largest Indonesian e-commerce company, which is likely went to the unicorn status few years back. And Philippines e-wallet company is called CoinsPH, which was recently acquired the another, the kind of say the Decacon company, which is Gojek. That's and then we have some other in Singapore, Malaysia, etc. And as Sunil kind of explained that most of funds LP investor is a Japanese corporation. So here we'd like to share a little bit about the situation, especially under this Corona situation, how the Japanese corporate investor as well as the financial investor like us is behaving now. What is the momentum now? Kind of things we'd like to share. Okay, so first of all, if we divide into the 3 sectors, one is the, as I told, the corporate investor, which is a relatively quite active in India as well for the past, say, the 60 month, 80 months or so. And the other sector is, of course, the financial venture capital, especially for the early stage venture capital like us. And the third one is SoftBank. You know, SoftBank itself as a single the player is quite large. So we would like to separately discuss the current situation. So first, a corporate investor, um, they are, unfortunately, very, very cautious to grab the new deal right at this moment. Of course, you guys can imagine very easily. So before that, I'd like to share that a little bit about the corona-related status here in Singapore and Japan. For example, Japan. By the way, Japan is just the cabinet announced that the PM Abe is going to make a speech, likely tonight or tomorrow, to announce the the emergency situation. But the Japan's law structure is not allowed to do the very hard lockdown things compared with the other countries. So that the people are strongly recommended not to move without any essential activities. Likely, which going to happen from the tomorrow or day after tomorrow. That's the media says. This is almost 90% sure. The focus that they say. So actually, the even before that, the majority of the corporates is, they recommend to not to, go to the office and remote work from the home. So the work from home is already, kind of normal thing there in Japan. And in the most of the companies, the situation is now the, no travel, of course, no hiring, of course, and no investment. So that is the unfortunate truth. But the I see that the no new deal from the Japanese corporates to startups, no matter where, is not going to happen at least the next 30 days. That is the I strongly believe for sure. But the of course the the exist as an existing investor who is already invested in the local startup there in India might of course be the strong supporter because anyways those corporates have very a strong sense of the urge to do the digital transformation. Anyways, the legacy, the business is going to be dying, but the new, the frontier business, like for example, case in the the mobility sector, or the remote healthcare sector, or the any new service is must try for them. So that they cannot stop that activity itself. You cannot stop their activity to engage in the startups who is doing the innovation things. So that no matter how they're gonna come back, but right at this moment it's kind of a the very emergency mode and it's some kind of a panic mode. So that the in that case we cannot expect for those sectors money. How about the early stage pure venture capital like us? So we are very opportunistic, behaving, creatures. So especially the people's now super bearish. That is actually the very good momentum for the people like us. So of course, it really depends on the micro circumstances, but at least for us, that is the first perception. So that the we won't never stop our investment. So yeah, please reach out, and we are happy to talk with you via online. So I believe more or less the the pure financial strategy investors' behavior or the mental momentum is like more or less same, I think. And lastly, the SoftBank. SoftBank is obviously they're in a bit difficult situation, especially for the financial situation. And the rumor says that they're going to do the private one because the to be public in the corporate and the the GP of the the mega fund is not easy. So the rumor says that yeah, they're going to be the provider, but who knows? I don't have any information. But you know that is still very symbolic. The player, but the more or less late stage investor who tend to be the very typical legal table of the cap table of the late stage the unicorn decacorns deal is now very bearish. So once again, so sector is also super bearish. So this is I don't need to to be the position talk, but that is the view from myself. So once again, late stage investor is bearish, corporate investor is super bearish, but the early stage it depends. And especially the for the existing portfolio company, we are the full support mode. No matter how, not only the financial side, but the everything. For example, every corporate of ours is struggling about the logistics or the supply chain. So for that, we are doing a sweat effort for introducing the authority or the police, the authority, etc. Such kind of activities are doing, so much effort by our local team led by the Brij. So that is the situation. For the last from myself is about the Singapore situation. Of course, the some of the chunk of the Indian money, VC backing money is coming from the Singapore, right? So Singapore just announced, the government just announced that the kind of a semi lockdown a few days back, which is starting from tomorrow. So semi lockdown means that the people not the uh, not banned to get out, but the business is banned. So you have to close the school, you have to close the office, you have to close the retail, but the people are not forced uh, to stay at home. So it is okay, but of course, that we are strongly recommended to stay at home. But that's why I say the half lockdown kind of thing is going to happen from the tomorrow. So the situation is get likely, the very near situation to India. But I think the the venture capital situation is the same. I think, of course, the one of the challenge for us, for all of us, is we are not able to travel. We as a seed stage investor, of course, at least one time, we'd like to see the founders who we are about to invest face to face at least one time. But under these circumstances, we changed this, our dogma that is not necessary. So we will start the conversation and to make the deal done online only. So I believe that such kind of a behavior is going to be the new normal. I think we have to accept this situation as the new standard. I think. I'm not the the specialist. I'm not the doctor, scientist, so I cannot say how long this situation is going to last. At least we have to prepare that this is the new normal. So that we already changed the our rule that we don't have to physically face with the founders who we are about to invest. So that is the one of the tiny example, but the such kind of a a lot of the things we as an investor also have to adapt to the new normal, not only the founders. That is my strong view, and the all the our team is behaving like that. Okay, that is from myself so far. I pass to you, Bridge.
Thanks, Abhiyar. I see in the chat window that a lot of people are having trouble with the video. If that is the case, should we switch to audio only? Sunil, are you there? Or maybe not. I guess.
Okay. So yeah, let's do that. So I will cut off the video.
Yeah. Okay, all right. Seems like now people are saying it's fine, and then once I'm done speaking, then I'll pass it back to Abhiyar-san, and he can speak as well. So let me just continue where Abhiyar-san left and talk about what is the situation with us as a fund and our portfolio companies. What's our current focus, and also how do we see the market panning out in the next few months? How will we come back into how are we now considering our investments, and what are the kind of areas that we're looking at, or the criteria that we're looking at, I should say. So as Abhiyara-san said, I think one of the main focus right now is, rightly so, to help our own portfolio companies, to help them extend their runway. If you're a startup today, you need to have at least 12-month runway, because the way we see the market is that next 6 months will be a lot of volatility, where it'll be hard to raise substantial external fundraising. There will be volatility in revenue. There might be situations where customers might renegotiate contracts, or getting new customers would be harder. Hence, there's a clear consolidation in making sure that you're running your business as efficiently as possible, and there is support from your existing investors. I think that should be the first port of call for most startups today. Once you have kind of stabilized your business, and as the external environment improves, we as I said, are actively still in the market. As Abhiyara-san said, that as a financial investor, we've already raised a fund, and there is a certain deployment cycle that we follow. In fact, there were two investments that we were in discussion over the last couple of months, and when we closed them just 2 weeks back, even as we were preparing for the lockdown. So to give you a sense on how we're looking at the investment landscape going forward, one of the key things that we will look at as we start looking at companies from an investment standpoint, is that we're looking at companies with a very long horizon, right? So first and foremost, the companies that we consider as early stage investor, we're looking to see how those companies would evolve in the next 6 to 10 years, right? So it's a very long term investment horizon from that standpoint. That said, there are certain criteria that we are going to pay a lot more closer attention to, given the current post-COVID scenario, right? So I think one of the clear things that we will be looking at is understanding if, first and foremost, if this is a business that has some inherent advantage in a volatile environment, right? So as you can see, there are certain businesses, whether it's digital news consumption, or media, or ed tech, or even supply chain businesses that actually have had an advantage in the current scenario, right? Digital healthcare businesses are benefiting through this behavioral change as we're going through it live. So one of the things that we will look at first and foremost is this a business which will benefit from the drastic behavioral changes happening both in India and across the world. I think that will be one of criteria that we will apply, and how companies are leveraging that, right? Second, one of the things that we need to have clarity on is how would the cash flow or the business model evolve as markets come back during recession time, right? So building a clear runway for your business and at a low burn is actually now a competitive advantage, right? We are no longer in a scenario where companies that have high cash burn and very long revenue horizon will be hyper funded, right? So to have a clear validation from a customer side in terms of how you're building your cash flow, what is the business model, and how are you building your margins, how can you keep burn low and show a clear path to profitability. So especially if you're trying to raise a Series A or a B round, I think investors are going to be very particular in terms of how would you showcase long term profitability, right? So I think that's going to be one of the key criteria to look at. Um, Coming to some of the things that we get asked questions a lot in terms of how startups can build partnerships with investors in Japan, especially corporate investors and others. I think one of the key things that investors from Japan look at is how would this partnership benefit in terms of their investment or business activity in India. So there are a lot of large corporates, large corporate investors, whether it's the big guys like Mitsubishi, Sumitomo, and others, Mitsui, who are investing in India. And one of the key criteria they apply is there a business synergy that one of their business units can build with your startup, right? And that is generally a very loosely defined term. It's something that you build on as you start to develop a relationship. But I think that's one of the key things to keep in mind, and especially in the post-COVID scenario, that become even more important. That is there a way where the startup and the corporate investor can start to attack a specific market and gain advantage over there. So that's one of the things that to keep in mind as you talk to large investors. Lastly, as I'm sure there are a few startups who have been very drastically affected, right? If you, let's say, in travel, tourism, hospitality, fashion, these are the sectors that will have a very large impact and will. And in some cases, it might be harder to even come back from that shock. And I have been asked by a few founder friends in terms of what are the alternate scenarios that they can work on. What are the ways in which they can continue to survive and build on from here. And one of the discussions that came out was how you can leverage your existing team, your existing product to maybe build for an adjacent market, right? This would be a time where a lot of businesses would be going through upheaval, and it's actually an opportunity, as Ebihara-san said, that if you're able to do keep your ear to the ground, figure out where the challenge is. There are two things that companies always look for, right? If you're, let's say, a B2B startup, how do you reduce cost or how do you help a large company increase revenue? And in a downturn, both of these become hypersensitive, right? So even if there is a way you can pivot or create a new product which helps large companies address these two aspects, I think that would be a good time to kind of brainstorm and see how you can come up with something new that doesn't exist in the market today. And if again you start to show some early validation, early stage investment is always available to take those bets, right? So I don't think so that would go away. It really depends on if you're able to showcase that opportunity and how you're able to get some early validation in the market. So I think I'll end now with this sort of an introduction, and I'll be happy to answer questions along with Ebihara-san as we go along. Sunil, over to you back again.
Okay. Yeah. So is that over from Ebihara-san also? So Ebihara-san, would you like to add something to end the discussion and then go moving towards the question Q&A session?
How about the move to Q&A?
Okay.
Yeah.
So one of the question being asked is, which are the sectors you think are going to be the key takers of this situation, and which are the ones you think will be dying post this era ends?
No need to say healthcare is the I think we better to divide into the two discussion. One is that even before Corona situation, the venture investing situation has been drastically changed. for the past maybe 1 year or so. So the people tend to be the super cautious about the bottom line than the top line, which is the profit than the revenue or GMV, right? So the but such kind of a momentum of the investor has been drastically reversed by the COVID. That is the situation it's happening now. So that the any sector who can make profit is the top priority of all the investors. That is the no need to this this is the the very top priority, and no any exclusion, exception. That is the one thing. And in terms of sector, of course, the the healthcare or the logistics or the supply chain would be now under this kind of the COVID era, um, you know taking the benefit. For example, in Japan or in Singapore, in Indonesia, most of the e-commerce companies right now say their GMV is say the 10 to 30%, bigger than the before Corona. And healthcare, no need to say. On the other hand, I think travel, no need to say, is just struggling, right? But the problem is the what about the corona situation is going to be settled down to be the normal mode? The people's behavior is going to be changed or is going to be back to before the corona. That is the the thesis that nobody cannot write an answer. So that that makes the investor very hesitate to capture such kind of the sector. So if you guys are the travel sector, accommodation sector, I want you to really consider about those hesitation of the investor. So investors hesitate once again. So if the situation is going to be settled down, there's such kind of a people's behavior, go travel frequently or take the flight frequently is going to be back or not. That is the we still have a mentary fear. So it's not easy to to make investments for such kind of sector. And the other important discussion is about the the ad and marketing. So corporates not to spend the marketing because anyways they cannot sell any they cannot sell the travel or the any hotel etc. So that the inventory of the ads for the online is almost zero now. I don't say zero, but they're very tiny, like a 10 to 20%. So the once again, ad industry is going to be back as a before the COVID era or not is also unknown. So for such kind of sector, also the the investor is very the very careful. So that is my straight answer about your questions, Neil. Anything else to Rich?
And yeah.
Right.
Yeah, so I think one of the things, as I mentioned earlier, to examine what are the things that companies would immediately try to get into. So one of the things that I see is this whole movement of work from home has probably led to a huge behavioral change. Even in legacy companies, which probably never used to have something like this, right? So the way people interact and the kind of tools that they use will change. The way companies want probably more automation would want to come in, so there's less dependency on human interaction, because the way companies would like to do a longer term risk planning is they would want to not be in a situation where something like this happen, it creates business bottlenecks, right? So the entire way of business continuity planning will change around that, right? So these are some of the sort of opportunities that we can see, both from sort of corporate side and also in terms of traditional business and small businesses as well.
So, 2 months back, there was a huge buzz and everyone was talking about the shared mobility and stuff. What do you think? how is this gonna be impacted? Because after this, I don't know how people will take the shared thing concept going forward.
Everyone, you want to take that? We have Smooth as our portfolio. So,
So once again, at the right very moment, nobody cannot predict that the people's behavior and the lifestyle is going to be back to the exactly same situation as before the COVID. So that makes the lot of the most of the investors to hesitate to take the investment opportunity. That is the unfortunately the same as even the early stage investors are same like us. So, but the some sectors have the strong belief. For example, the healthcare. Of course, in any situation, healthcare is a health so it is definitely needed. But the if people would still frequently travel around or not is still unknown. So unfortunately, I don't have a right answer at this moment. But the one thing for sure is once again, business corporate they have no choice to do that. For example, the OEM company, Toyota, etc. They have to shift into the shared mobility or the autonomy or the the much more efficient mobility like EV. So I don't think that effort won't stop. It won't, it will stop. So, but from the much more larger perspective as an investor, including the financial investor or a late stage investor like a PE, I don't have a right answer at this moment.
and I think just to add, is from a local India standpoint, I see there are two scenarios. One is the immediate short term in terms of next 6 months, and then the long term, right, six to maybe like say a year from now, right. So in the short term, I actually see there'll still be a lot of concern around how COVID would what would be the kind of effect locally, right? So I don't think so. The fear for cases or the threat of the disease would go away, and people would sort of gravitate more towards personal transportation or using shared mobility from a standpoint of, let's say, small scooters and stuff, which are single use, right? Whereas one person use. And maybe the services like pooled or small vehicles that are or buses and stuff, maybe a little bit lesser in the short term, right? But if you see a long-term horizon, a year or more, I think we would come back to where we were once there is enough immunity in the general population, or when we have a vaccine and the threat has gone away.
So, digital payments are definitely gonna get another level of push. Do you see this also happening to the crypto?
Sorry, your voice is cutting. Can you repeat once again?
So, how do you see the cryptocurrency moving from here? Is the situation a conducive environment for crypto to pick up and go to the common public?
Brij, go ahead. How about you?
Yeah. So at least my opinion is that people would gravitate towards something that is more safer, where there is a known usage pattern and there is a known sort of a long-term horizon. At least personally, a completely personal opinion, I think crypto market will take at least 1 or 2 years to come back and scale. I think most companies and consumers would try to keep to more safer instruments or safer products that are well understood with clear paths to value add.
Okay, and so from the Rebright perspective, uh, are you going to take up some deal in next 2 to 3 quarters, or is it actually going to hurt your sentiments also for the next 2 quarters?
Yeah, for sure. As I told that we as a pure financial investor now is a uh, I don't want to say good. The people are struggling, but at least the financial, the perception, not a bad timing to make investment. So that's why not. So we are quite bullish about the new investment.
So Brij Han said, the focus will be going forward. The focus is definitely going to be shifting towards the companies who have a lower burn. Does that implies that the startups coming from the tier two cities are the time for, or is it the right time for the tier two city startups to get in the picture?
Yes, actually, the one of the pipeline, deal is the exactly this such kind of a example. Tier, the startup team from based in the tier two, who is tackling the kind of digital transformation for the some sector. So that is the our type definitely. So one of the reason is they tend to be able to remain the burn low compared with the tier one cities, the startups. No matter no need to explain. So that is a very good the good fit for the new era of the the nowadays much more profit sensitive startup preference by the investors. So yes, right. The answer from me is yes.
Yeah, and just to add, I think what I also meant from low burn is to be more efficient. So a lot of attention will be paid, and this is kind of already started in terms of understanding unit economics, but very specifically in terms of what is your acquisition cost for the customer, how long will you be able to retain them, and how would that, how viable is that customer, both consumer or business, right? So I think a lot of attention will be paid to that.
Okay, so I have one more question, which is, what is the outlook for the investments in the automobile sector startups? How do you see the current environment for the Indian auto industry to adopt to multi-brand sales models and digitalization of businesses in India?
From the Japanese investor point of view, Japan is the car country. So there's tons of the investors rushing into the India to capture the sector exactly what you said now. So as I told that their effort for for themselves to do the digital transformation won't, but right at this moment, say next, say 30 to 6 days at least, at the shortest, they have to stop that. Anyways, they cannot travel and anything. But yeah, after that, I believe their the momentum won't change. They're gonna keep doing the investment into that such kind of the sectors. From the pure investors' front point of view, it really depends. It really depends on the subsector, and it really depends on the micro, the startup technology or exactly what they're doing. So, for example, we recently invest in the bus operation company who is having their very unique approach. So we do that. We do the mobility, but once again, it really depends on the micro company's situation. And of course, that business has to have very clear, the profitability focused. And if it's a technology, they have to be able to adapt into the demand of the larger players. That is my view.
Prince,
Yeah,
would you like to add something on it?
Ibihara has given a good overview. I think we can move to the next question. I don't have anything.
Okay. So how is so this is all about the technology startups. So is Japan open to the skincare, especially the Ayurveda startups also?
Yes, very much. Japan is also the close country, and yeah, I know the some large player is keen to enter the India market, who is related to the skin and the healthcare. Sorry, the cosmetic, etc. So, largely, the answer is yes.
And there are some of the people who wants you to take a deeper dive into the healthcare sector. So within healthcare, what are the key areas you think will pick up from here? Will it be telemedicine, diagnostic devices, or what are those subdomains you think going forward will pick up?
I think overall, very broadly, foreign investor, including the Japanese investor and the Singapore investor, are very much bullish about the healthcare sector, including almost all of the sector of the healthcare. But it's, of course, the after the COVID thing, the remote something. For example, we are the one of the lead investor of the DocsUp. So their transaction is the surging now, and some remote ICU, for example. Remote ICU is a very hot topic in the Western countries nowadays. And maybe the same thing is going to happen in India or any other developing country or Indonesia. And e-commerce, of course, as Brij said, that we are the lead investor of Medica Basal, who is to the uh, online purchase by the large hospitals. They sell from the needle to the high-end machines, everything. So, uh, at the very right this moment, the supply chain is very much a challenge, a little bit challenge, but the in the short term it'll be fixed, and the such kind of supply chain for healthcare is of course the other hot sector as well, and the other things like the diagnostics, as you said, or even the biopharma as well. So almost all the sectors are they're very keen. And the maybe Rich, you can elaborate a little bit about the IoT that we made the introduction before.
Yeah. Yeah, so within healthcare, we're also looking at medtech and IoT-enabled devices. Those are a little bit harder to scale, especially when hardware is involved. But what we're seeing is a lot of companies coming up with alternate hardware, which is lower cost but high throughput or high validation from a clinical standpoint, and it's getting a lot of acceptance both in the medical community in India and outside. So definitely continue to look in that space as well.
So, Brij, from for a long time, the construction and real estate has not been doing really great in India. Do you think this situation is going to be the last nail in the coffin of this sector?
No, so I don't see, construction real estate can never really go away, right? People will always need houses and offices to work out of. But what we've had is a very long and protracted correction. And with real estate, especially, it started even a few years back with RERA being implemented. I think what the industry was hoping, with the green shoots coming in the last few months, was that the excess inventory was getting cleared, and this year they were hoping for a turnaround, which now likely looks not happening. I mean, looks quite unlikely. Um, uh, on the real estate side, the commercial real estate leasing was actually doing pretty well. So if you look at the major cities like Bangalore and Gurgaon and Pune and others, Hyderabad, there was a huge commercial real estate demand growing in double digit per year. That actually now I think will see a major softening as companies will do hiring freezes, or there'll be at least some layoffs. And in fact, this whole work from home movement will accelerate further. Yeah, unfortunately for real estate and construction, it would be the hard times would continue. Construction might benefit from infrastructure spending. So, one of the stimulus measures that the government will have to take is increase government spending and continue to do so, especially on the infrastructure side. And the construction industry might benefit from that.
Thank you. So, Ebihara-san, my next question is to you. Uh, in two delegations, because I have been one of the core member of the NASCOM Japan VC Connect program, and in two of our delegation, I haven't seen any of the startup from the solar sector getting selected and participating there to pitch to the VC community. And interestingly, the way we created this jury was we had a lot of representation from the Japan VC side. Does that mean that the Japan VC community is not really concerned about the solar segment, solar energy segment?
Solar, if we specifically, named some of the larger players like Panasonic or the Denso or the some other, the battery player, energy player, and also even the SoftBank is massively investing in the solar sector. So definitely the Japanese corporations are very keen for the sector itself. But at the same time, there's, kind of, they're quite picky. I mean, in terms of the very specific technology and the IP, that they have a very specific preference, what type of technology they are looking for, or what type of the solar panel they are looking for is because of they are the very high end technology, mega chip companies. So that it is quite picky from them, and then also they are sourcing around from the Israel, US, etc. So I believe that's why. So important thing is not only the solar sector startups. I want you founders to be able to explain very clearly the very prop by not only the technology, by but the marketing and the delivery. I mean the sales. So that is the most important parts that they don't have, right? So not only the technology sourcing, but that they are looking for the partner sourcing to deliver their technology and the product. They're in the huge market in India, but they cannot do it by themselves. So that you better to emphasize that you can be the not only the technology partner, but the delivery partner, so that they can be the much very, aggressively talk with you.
Okay. Thanks. So I have a very interesting question being raised here. We are a wellness retreat platform, even though the current situation has impacted our bookings, but our traffic has jumped 2x due to the increased user engagement on the content side during this time. Looking for now, the founder wants your view that how investors are going to take these interim metrics while evaluating a startup.
Brij, go ahead.
Yeah, so unfortunately, I don't think so. The spikes during the lockdown period would, while the additional engagement is really great, investors who want to see what this additional digital engagement translates to in terms of long-term business, right? How does that translate into your business model? How do you monetize that? So unfortunately, I don't think so. Even for, let's say, even content companies, while people are at home, there will definitely be a spike in terms of content usage, but that will probably shift as things return back to normal. So the question really would be that how did you use this additional traffic, and how did that benefit your business long term? And if you can demonstrate that, then maybe there's an opportunity that investors might back you on.
Thank you. So, so one of the questions that I keep on hearing from startup founders is, they were in very advanced stages of discussions. So they were about to close their round with their one or some VCs. And all of a sudden, because of this situation, now all the deals have gone to the back foot, and those still being considered are on the renegotiation now. What is your suggestion for those founders who are facing the situation of reevaluation for their startup once although things were in line a couple of weeks back?
Yeah, that is the very unfortunate and the the unfortunate situation. It's happening all around the world, and it's not only in India. And actually, the for the financial institution side, including the VC fund, etc., is also the facing the bit of the similar situation. For example, the AVC is raising the fund from the LP investor, but suddenly they cancel or postpone, etc. That is happening. Same is happening for the debt financing player, right? So they suddenly withdraw the the lending deal because of their cash flow. So it's happening like a domino effect, the butterfly effect, kind of happening. So that the only thing I can say is the let's be the very much conservative. Let's not to hope the things that you supposed to get is not easily coming. So only thing we can do is the multiple scenario. For example, if you are raising from the venture capital, you also start immediately talk with the debt financial player or the of course, the separately you have to cut the burn very much. So that's what I can say.
To just add on to what Evira-san said, we've also obviously seen some of this happening within our own portfolio. So a couple of things. One is if you have a signed term sheet, um, the likelihood of it going to completion are obviously higher. But if pre-lockdown you didn't have a signed term sheet, then obviously all bets are off. Everything would have to be rethought through. I have also seen cases where it is a signed term sheet, valuations are being renegotiated, and again, it depends on business impact. I think the one of the things that you can try to use to salvage the situation is see what you can project post lockdown, right? So once you get out of this situation, how would you be best prepared, or what have you done to prepare your company, your business to leverage and sometimes even take opportunity of some of the behavioral changes that have happened, right? And if you can clearly demonstrate that opportunity to the investors, then maybe there's a likelihood of at least going through and closing the round, even though if it is a smaller negotiated valuation.
So I'll take another two or three questions and then we'll wind up the session. So I have another question. The founder says we are a language technology startup enabling B2C businesses localize their website and applications to multiple language through AI and ML. Now, digital businesses is on the upsurge due to the current scenario. What is your outlook on this situation and the startup?
If the business is, if the all of your business process is concluded online only, there's no any physical activity, including the sales, then the this COVID situation won't affect your business, right? But if you have any physical activity, for example, sales, then you have to be very careful. It really depends on that. But the overall, we monitoring very carefully all of the portfolio company, not only the India, but the Indonesia and other Southeast Asian countries. Digital concluded, business startups KPIs are surging now, like a media company, etc., or the e-commerce, even the e-commerce. But e-commerce is sometimes, the having the delivery, the struggling. So that it really depends. But the overall internet, the percentage of your business processes online completion or not is really affect. That's my view.
So RPA is something in India. Robotic process automation is something which is picking up big time. But when it comes to tap the Japanese market, I don't see many of these RPA firms able to tap to the ecosystem in Japan. All of us understand the language barrier. Definitely, the language barrier is one of the biggest hurdle for the Indian RPAs to be implemented there. Any suggestion from Ebihara-san? Your suggestion on if Indian founders can, those who are very eager to take this opportunity up, any suggestion for those guys? How do they pursue it?
Oh, actually, we just invested in the RPA startups recently, only a few weeks back, if I'm not wrong. So actually, I don't think the language would be, the very much, entry barrier. Even though the kanji 2 byte character, it's not so hard for the to translate by the dictionary, etc. At least my our explain the experience for the to the DD. Done the DD for the RPA, the pipeline that I explained. So important thing is to have a partner. So for the early stage, if you're the the late stage startup is okay, but for the early stage, at least the B minus startups, definitely have to have a local rep, sales rep, or the technology partner there in Japan. Otherwise, it is very hard for the Japanese legacy corporation to deal with the Indian startups directly, especially about the technology startups. So that we strongly recommend to have a local rep for all of our technology portfolio companies. If it's a service company, I don't even recommend to get into the Japanese market. It's quite tough. So the the business custom is totally different. So that's my advice.
So, do you think this is the right time to launch a video on demand aggregator app so users can use and see videos at one place instead of installing multiple apps? Do you see that?
Go ahead, Brij.
I think the biggest challenge in doing something like that is customer acquisition, right? It takes a lot of money to spend in marketing. The other aspect of it is also the content partnership and licensing. Any kind of content aggregation requires a very deep partnership on the licensing front. So I think if a startup has ability to solve for these two questions, I think content growth right now in digital consumption growth right now is exploding. So there's a lot of opportunity there.
So one last question: what is the state of Martech startup at this moment?
Sorry, your voice is cutting. Could you repeat once again?
What is the state of Martech SaaS startups at this moment in Japan?
Okay. Did you say SaaS? I couldn't understand the words.
You mean
right?
marketing tech? Marketing tech?
Yes, marketing tech SaaS.
Marketing tech SaaS. Okay, marketing tech SaaS. It's a very specific question. For example, Japan is a kind of a SaaS country. Everyone says SaaS, and then they also the marketing is also the one of the very typical sector which is having the very good fit with the SaaS business model. So honestly speaking, tons of the marketing SaaS startups over there. So to compete with them is quite tough. Even their side is very keen to enter India market. So the competition would be very, very tough. So if you have any specific, uniqueness for the very, niche subsector, maybe it could be interested. But if you say widely, if you ask me that the widely about the what is the chance for the India startups to go into the Japan market as the marketing SaaS startup, I don't think it's easy. It's very much easy. Too much a red ocean, I think.
Okay. Thank you very much, Ebihara-san. Thank you very much, Brij-san. Thank you for your time. I hope everyone enjoyed the discussion, and I hope this was helpful to most of the founders who raised their question, and we were able to address most of the question. Thank you so much, and
Thank
stay
you.
safe.
Yeah, you too. All the founders.
So,
Sure, go ahead. Yeah.
yeah,
What I
any
want.
last comment from Ebihara-san from your side and Brij-san?
Yeah, thank you for the very enthusiastic engagement and a lot of the questions. I hope we could, the answer properly. So I know the India is the one of the most toughest country in terms of the, the lockdown, strictness. So I'm now hearing the Singapore. Singapore is slightly better, but the situation getting very closer to India. So that I'm always learning from my team and my portfolio founders how we can prepare for the these kind of lockdown things. But I surely, we gonna overcome the period. And then important thing is, I what I love about the entrepreneurship is you overcome the difficulty. That is one of the strengths of the founders and the entrepreneurs, right? Then make the challenge into the opportunity is also the character of the entrepreneurship. So that the entrepreneurship can contribute to the society is very huge, I believe. So that I'm very happy to be the backer of the entrepreneurs. So that if you guys have any, I don't know, a question or support, I don't know if we can, meet to the how much, but please don't hesitate to reach out to our local team. Yeah, thank you very much.
Right. Yep. Thanks everyone. Thanks for listening to us. And as Abhiyar-san said, more power to you to survive for the next 6 months. And if you're able to pivot and brainstorm and come up with solutions